Yo guys, welcome back to another video, and for this video I'll be showing you guys a very powerful 5-minute scalping indicator and trading strategy that is using draws on crypto new trading strategy. So you guys may be wondering why I'm trading his strategy again. This is because recently he just released a new community script, which means that we can just detect the MACD upticks auto without having to decipher it ourselves. And for those not knowing what I'm saying, you guys can check out the strategy later when I talk about it. But anyways, I'm going to be adding other indicators onto the chart to try to improve the strategy as well. But before we start with this trading strategy, make sure to sign up with Fairdesk. And if you use the link below in the description and sign up for a Fairdesk account, you can get up to $600 for depositing. And just by depositing you can earn up to $600, and that is a very good start to your trading account. So if you guys want to sign up for a Fairdesk account, make sure to use the link below. But anyways, I'm going to show you guys the new scripts that Draw on Crypto just released. So if you go to search Draw, this is the MACD scalping script. So basically what it does is it tells you the MACD upticks. When there's big red MACD upticks, it'll be highlighted in red, and if there's big green MACD upticks, it'll be highlighted in green. And together with this, what he uses is the 200 EMA. So you want to input the EMA, change it to 200, and you can change to any style you like. So the strategy for this is pretty simple. When the price is above the 200 EMA, you want to go long, and when the price is below the 200 EMA, you want to go short. So let me give you guys an example of how the strategy works. But definitely this is not how he trades. He uses order blocks as well, but I'm just going to give you guys a basic example. So like right here we have a break above the 200 EMA, and you can see that there's a big red MACD uptick, which suggests that there's a pullback into the market. So you buy on the uptick right here. And since we're trading Bitcoin, what he uses is a 0.4% stop loss. But in this case I'm going to use 0.5%, and I'm going to aim for 0.6% take profit. And since he's using a lot of leverage for this, if you use 10x leverage, this 0.6% will be 6%, and if you use a 20x, it'll be 12% profit on your account. So it doesn't really matter how much you take because you can use leverage. So like right here we have another down tick, and you would take that position again. So you do that, and you have a 0.5% stop loss and a 0.6% take profit. So basically whenever there's a big red uptick when the price is above the 200 EMA, you would take that position. Same thing here, you take this position right here, but unfortunately you'll be stopped out. As you can see, this is a loss, and definitely a lot of losses will come your way if you trade solely by using this strategy without any confluences. And confluences are basically confirmations by either maybe the order books or by your own intuition, or you can even use other indicators to confirm that the price is indeed going to go into your position. Like right here we have MACD downtick, a very big MACD downtick, and if you take that position right here on the first MACD downtick, you realize that you get stopped out. So this is why you have to use other indicators to try and help you to improve the trading strategy. But anyways, same thing, I'm going to show you guys one last example. Same thing for the short side. Price is broken down below 200 EMA, you wait for a big green uptick, and that will be right here. 0.5% stop loss and a 0.6% take profit, and that will be a win. So basically that is your first indicator that you'll be using for taking your trades. You just want to look at the MACD upticks, and when price is above, look at red upticks, price is below, look at green upticks. So now I'm going to show you guys how you're going to improve this indicator. So you want to go to community scripts, and you want to scroll down under the top section, and you want to look for volume based support and resistance zones. So you can just search it as well, volume based support and resistance zones. So for this, as you can see, it is very messy. There's so many zones here, but all you'll be needing is the 5-minute zone. So in this case, you want to keep this one right here. You change this to red in color, and and you can leave the opacity at 10%. For these other zones, you want to click on the SL zones, click disable, disable, and disable. And so basically you're only leaving the 5-minute zones, and you can see the zones only update on recent time frames. So I'm going to show you guys how to trade based on this support and resistance zones. So if we look right here, we have a breakdown below, and we are only looking for NACD upticks now. So we break below the 200 EMA, we want to look for an uptick. So like right here, you see that this is a support zone, and it bounced off the support zone and broke down after. So when support is broken down, right after, this zone will become resistance. And the same thing here, if the resistance is broken up, this zone will become support. So in this case, we see an uptick here, and why is this a good position to take? Because let's say we take this position here, and we have a 0.5% stop loss. So why will you take this trade? Because this support zone is now a new resistance. So since you have a 0.5% stop loss, even if price comes up to this range where there's new resistance, it will bounce back down, and that is a good position to take. So this is how we use the support resistance indicator. So like right here, this zone, as you can see, you would not take this position because it recently went down already by quite a lot, and there's no resistance zone over here in this area to help you to tell you that the price is going to go down. Although it did go down to the downside, like if we were to take this position right here, this based on this uptick, indeed like head down to our take profit. But however, this is not a position you take. So you just want to wait for an uptick into resistance when you're shorting, or downtick into support when you're longing. So yeah, you always want to sell at resistance and buy at support. So same thing here. We realize that here is a support zone, and if you see this uptick here, and if we were to take this uptick at the wick, and we have our stop loss here, you know that the support will become new resistance, and you will take this trade. But unfortunately in this case, although you took this trade will unfortunately be a loss. But here I'm going to explain to you guys what I mean by support will become resistance. So this area where there's support, it got broken down and it came back up to here. You can see there's resistance in this area because price pushed back down. So once support is broken, it will become resistance. Once resistance is broken, it will become support. So let me show you how resistance broken will become support. You can see that there's resistance in this area since buyers tried to push it up, rejected, push it up, rejected, push it up, rejected, and this is resistance. So you know that there's a lot of people that want to sell in this area. So you see that price breaks up above and it comes back down to this area. So the previously resistance is now support, and it bounced back up. So basically you want to use this theory where once it breaks, you want to use it as support or resistance to go back down. So since we are still in the downtrend, we want to look for short positions. So we want to wait for green upticks. We see that we have this support zone right here. We broke down the support zone, and we see that there's upticks, and we want to sell at the support zone. So we will sell right here. So we have two confluences. Basically is here we have two upticks, and also we have resistance in this area because the support is broken, making this area resistance. So this gives us the two confirmations that we'll be needing to go short. So let's short right here, 0.5%, and even if the price goes up into your stop loss, this area acts as resistance, so there's a chance that it will still go down and hit your take profit. So let's see right here, we wouldn't buy anything or sell anything because this resistance is just newly formed. So let's look for another trade. And yeah, here is just kind of messy. In this type messy areas, although there's upticks, you wouldn't want to take them. You want to wait for a strong power move. So in this case here, you know that this area, these two zones is resistance, previous resistance, and we have two upticks here. We have one big green uptick and two uptick. So you want to sell at this resistance zone, where there is selling pressure. So in this case here, you can see that we have the upticks and we have the previous resistance here, and you would take that position. So you sell it at 0.6% and 0.5%, and that will be a win. So now I'm going to show you guys how to take long positions. So let me zoom back into the time frame where the price is above the EMA. So I'm going to replay on the chart here. So we see that there's resistance in this area, support in this area, sorry. So we're going to let it play out. We're going to wait for a break above, and here we have the break above. So you want to wait for a downtick on the MACD, and here we have our downticks. So we want to wait for any confluence. So we see that here, this is an area of previous resistance. So I'm going to highlight that area. It's around this area right here. If you zoom in, basically this resistance here is broken and it acts as support now. So we're going to wait for price to head down to our support area. Let's see if it does. But it broke this 5 minutes, so we're going to wait for another downtick. So we'll wait for a downtick, and here we would buy this position right here. Wait, let's wait for one more downtick. Yeah, we will buy this position right here. So you might ask, why am I buying this position here? It's because we see that in this area, this was previous resistance, so it acts as a buying zone, and there's once resistance is broken, it acts as a supply zone for it to go up. So this is how you will take this position, and let's see whether it goes up. And indeed it did. So basically, once resistance is broken, like I said, it acts as support. So you want to use these zones and use it as confluence. So sometimes it might not respect the zone 100%, like right here it went back down a bit, but you know that this is the area where there's buying pressure. So let's wait one more time, see whether there's another trade. We're gonna wait for a downtick. So we have downtick here, but there's no support in this area. And here we have a support, but there's no downtick. Okay, recently, as you can see, we have 3 big upticks, and we have a bounce off support. So this is a valid entry. So you have a 0.5% stop loss and a 0.6% take profit. And here we have the trade taken. So you basically, you want to wait for the downtick for this case, and you wait for it to reach support. So in this case it did, and I took that position right there. So this is relatively complicated video because you have to learn about how to trade resistance and support together with using the draw on crypto scalping strategy. But if you guys want me to go in a more in-depth analysis on this video, because this video is too long, I wouldn't explain it more here. If you want me to get more in-depth and make another video, if you can hit 25 likes, I'll do so. But anyways, if not, yeah, that's it for this video, and hope you guys can use this strategy to trade as well. Thank you guys for watching, and see you in my other videos.